Oh, simple, tried and true.
Yeah, exactly. The easy way. Yeah. So, a question for you guys. During the space, are you guys going to have it open for people to message in their questions or?
That's entirely up to the speaker in general. Some speakers, guest speakers, don't want that. Some do. So I'm going to leave that entirely up to you.
Oh, yeah, I'm totally fine with that. If somebody's got a question they want to ask, they can ask whatever they want.
All
The
right.
more, the harder the question, the better.
All right, perfect. So just for those listening, if you want to raise your hand, there's not a lot of people right now, so you're going to get the priority to speak. Um, we're going to go through a few questions, and then after that, if you still have any further questions, raise your hand, and we'll try to do this as organized as possible. Just a couple things to keep in mind. Rod isn't an expert in this field, but he is not. He's giving more general advice. So if what he's saying may apply to some people, but may not apply to you. So keep that in mind. It's always good to get somebody to hire someone specialized for your situation. Um, and if you ask any questions, please keep it like legal. Um, anything that's allowed to do, you can do, but don't ask for like, how do I create some sort of Swiss bank account that the government never knows about type situation. I don't even know if that applies or if that's a James Bond thing, but yeah. So thank you so much for coming. Rod, we're going to get this started. We had some technical difficulties, but it's all good. We're here now. We've got Rod Warren here, who's a crypto. You're an accountant, or why don't you give a bit of a spiel elevator pitch about yourself?
Sure. Okay, so my background is business coaching, investing, and tax. I'm not an accountant, but I've worked in and around tax and investment issues my entire life. So this is kind of my home turf, so to speak. So our company is Crypto Records, and our purpose is to create the crypto tax reports for investors. So if somebody has traded crypto, they perhaps have not filed their crypto tax yet, they need the report generated. That's what we do. And not to be confused with the crypto tax software companies. We actually use the crypto tax softwares. So we'll import the transactions. And then, of course, there's all types of editing and amending and updating and making sure the report's accurate. So what our company does is create the tax report that you need so that you can get what is the gain, what is the loss, what is the income on your crypto taxes. So current year, past years, all that fun stuff.
All right, so I guess there are people who have been doing this a while for like your standard capital gain stuff, be it through like mutual funds and stocks, dividends, all that jazz. These aren't really terms that apply, at least not yet, to us in the crypto field. Um, Maybe you could uh, compare staking, but to dividends. But what are some of the key differences between, you know, investing in crypto, like declaring your crypto capital gains and declaring stock capital gains?
Yeah, for sure. So definitely there's a lot of confusion about that and in kind of a good way. It's been resolved. It's just that most of the perspectives that the tax authorities have taken is not really well known in the public yet. And there are some issues in the world of crypto where current tax laws need to be figured out. How do they apply to certain unique transactions? So the simple answer is that the tax authorities have deemed crypto to be taxed as a commodity, which in tax language means that the current rules that apply to trading stocks will apply to trading crypto. And the current rules that apply to paying tax on interest will also apply to crypto. It won't be any different. So, what is different is determining how do you categorize all these different crypto transactions, because there are crypto transactions that use terminology and mechanisms that don't exactly have a perfect parallel into stocks and things that pay interest. So there's a lot of interpretation. But 99.9% of the time, If you have a crypto transaction that would result in capital gains or would result in income, because if it's something that pays a reward similar to interest, the end result in taxation is going to be very similar. The complexity comes down to understanding the transactions and creating the transaction report, because unlike typical investments where you'll just get a T3 or T5 in the mail, or maybe a statement of capital gains, crypto doesn't have any of that. And so it's a little bit of a wild west right now in context of actually calculating what those gains and losses are.
And wow, that's that's a lot to take in. So like you said, like 99% like similarity. Can you give me an example of that 1%?
Yeah, like there won't be an exception where something's got its own taxes in crypto, but and in context of an exception, it's not as much as it's an exception, but it's just that it hasn't been fully defined yet. A good example is airdrops. Um, there are some CRA individuals who have said to me that they think, or accountants who have said to me that airdrops will be taxable and there'll be a capital gain because your cost base, of course, is zero. So if you get a $300 airdrop, that's a $300 profit. However, there are airdrops that are spam. There are airdrops that are a form of marketing. There are airdrops that have malicious code that are designed to steal the crypto out of your wallet. So that's not exactly taxable capital gain material, in my opinion. So there are issues like that that are unresolved. But ultimately, all crypto transactions that are taxable will fall into capital gains or interest. There will be some that are simply not taxable. So, for example, you put $5 of crypto in your wallet and you go and spend that $5 buying coffee. You haven't invested it, you haven't gained, you haven't lost. You put in five, you sold five, so there's no profit, and you didn't use it for investing purposes. So that's just a non-taxable transaction. But the ones that are taxable, they will be capital gains or the equivalent of interest, which the CRA refers to as income.
You bring up a good point, and I didn't think about the airdrops, especially the fake ones, because I will get quote unquote $10,000 airdrops, which is not real. Like you said, to get those airdrops, they tell you to go to this page, sign a transaction, and oh, your ETH is gone, right?
Yeah,
So
yeah, exactly.
it kind of brought up a new fear. Like, what if the CRA goes, "Well, you got this $10,000 airdrop"? I'm like, it's not real. Um, so new fear unlocked, but hopefully they get their act together with that and they figure that out. Um, and you also brought up a scenario about the like you had to buy something with Bitcoin. You buy $100 worth of Bitcoin. You then buy that $100 product. Uh, if in a situation where even Bitcoin is very volatile, and the time it takes you to buy the product through the Bitcoin, it goes to like $120. Would that still be? Would that $20 be taxable? Even
Yeah, absolutely. Absolutely. Gains on your investments are taxable whether you intended them to be there or not. If I buy $1,000 of Tesla and I'm planning on giving that money to my friend, but before I do that, Tesla goes to $1,500, I've got to pay tax on that profit. I may not have had the intention that Tesla would go up, but it did. So the way the rules work in Canada, if you have a gain, it's taxable. Uh, so it's so you may not have a specific plan for that money, but if it just so happens to go up, you pay tax on it.
that's interesting, and keep in mind for everybody, especially us, because we're dealing with USDC a lot, and I imagine that's pegged to the Canadian dollar. So there are people who probably buy USDC not as an investment, but I imagine if the Canadian dollar went down, they would have to pay taxes on that as well.
Yeah, and just one terminology thing there. You said that the USDC is pegged to the Canadian dollar. It's not as much pegged. I'm sure you didn't really mean pegged, but it's priced in the Canadian dollar. So the USDC, it will float up and down, and yeah, you can have capital gains or income on the differential between your USDC and the Canadian dollar. If you're holding USDC and the US dollar goes up in relation to the Canadian dollar, and you make $1,500, that's a $1,500 gain. And that would definitely be taxable. Now, one thing I should mention, there are forms of taxation that is deferred. Like you can hold, let's say your $1,500 asset appreciates. You got a $1,500 amount of appreciation, but you don't sell. If you haven't sold, then you haven't triggered the gain on that. It's always possible that next year it could go back down, and then you don't have a gain. So your gains are triggered when you dispose of the asset. And that's another very big myth that is prevalent throughout the entire crypto sphere, is that you pay your taxes when you bring your crypto back into your bank account, when you convert it back to fiat. But that's not the case. If you sell one crypto for another, you've immediately realized the gain or loss on that transaction, and that's reportable for tax in that year.
Okay, good to know, because a lot of people I know do that, and I'm sure that they don't tell the CRA when they do that. They, sell it for Bitcoin. They think ETH's going up, sell their Bitcoin for ETH. It goes up, then they put it back into Bitcoin. So all those are taxable events, correct?
Absolutely. No different than you buy Ford stock and you sell it and switch it to Microsoft. The moment you do that transaction, you've secured the gains in one or the losses. So it's no different than trading stocks in that manner. And you had mentioned that some people may not report or tell their accountant or CRA that they've filed those taxes. That actually is a very key point that I would like to bring up.
Of
Um,
course.
yeah, and I would say, like, if you were to narrow down to me and say, what are the two main things I would say to somebody in the world of crypto? Number one, I would say, is I want to have a talk with you about the level of pain that you'll go through for not filing. And secondly, I would say the second main point is you can save yourself an enormous amount of time and hassle and frustration by keeping a transaction journal. And I'll explain what that is. So maybe I'll just take a couple minutes and walk through those two things.
Yeah, by all means.
I have been through 4 audits personally. One of them crypto, a GST audit, tax audit, corporate audit. So I'm very familiar with what it's like to go through an audit with CRA. Our clients have been through audits. It can be very expensive. It can be very painful. And one of the biggest problems in the crypto sphere right now is what I would say a dangerously low lack of understanding about how much pain you would go through for not filing your crypto. Um, and we all have the same kind of opinion. We've all said things like, we're frustrated at the government, they mismanage our money, they already get enough of our money. Why would I file this taxes? It makes us even more angry to give them more of our money, and this type of thing. That's a common view that probably is held by the majority of Canadians. However, the problem is, no matter if somebody is frustrated at government mismanagement, government at how much they're paying in taxes, whether they're frustrated or not, that is a completely irrelevant point. If you get an audit letter in the mail and now you're being audited, and the Canada Revenue Agency has legal authority to impose penalties, fines, interest for your overdue or unreported crypto transactions. And now, when you're looking at a tax problem and they're auditing you, your opinion and my opinion and everybody's opinion
Means
about how bad
nothing.
our government is just doesn't matter. Ultimately, now you've got a tax problem that hopefully wouldn't evolve into or escalate into a legal problem. So, regardless of all those opinions, you need to look at what kind of risk are you holding if you're audited. So, in that context, let me explain what I think are the 3 sides of Canada Revenue Agency if you have crypto transactions that you didn't report. Could be a year ago, 5 years ago, this year, but let's just say you have unreported crypto transactions that are supposed to be reported for tax reasons. Well, here's the way I explain it. And I'm, in my opinion, I think based on my experience, this is pretty close to reality. Um, if if you simply haven't filed something and it's only been 1 year, and you go to them and you say, hey, listen, I've got these transactions from a year or two ago, there's $1,000 worth, so the time frame is not large, the amount of money is not large, and you're coming forward saying, here they are, we're going to fix up the last 2 or 3 years of our taxes, so we're going to file an amendment to those. So what do you get? um, Versions of CRA number 1, you've got the upset Labrador Retriever. The Labrador Retriever that wags his tail at everything in the world and is always friendly, but is a little upset. But an upset Labrador Retriever is not too scary. So what do you get in tangible terms? You've got some penalties, you've got overdue interest, and you carry on. That's it, right? But then let's say you've got CRA version number 2. So you've got 2 or 3 years of you've got 2 or 3 years of crypto transactions, and you haven't reported them. And the scenario is different. Instead of you reporting them to CRA audits you, and they find out. So now you've got a strange scenario. You've got CRA is auditing you, and they're saying, hey, you didn't bring this forward. Now you don't have the upset Labrador Retriever. Now you've got the barking German Shepherd. A little more scary, a little more intimidating, and the penalties will be worse because they can heighten the penalties. They can let the penalties go. They can increase them. They can double them. And they can be a lot more rough to deal with if they say, hey, we caught you, instead of you coming forward to them. So now you got the German Shepherd, right? That's a little more scary. It's more rough. It's going to cost you more money. You're going to be paying your accountant. Your accountant is going to be on the phone with CRA. You're going to rack up quite a bill, quite likely, if you're audited. My bill for my crypto audit was enough money to buy a small car. I'm not kidding. It was pretty terrible. Now, CRA version number 3. And this would apply especially to people who've got a lot of crypto experience, more professional knowledge. Maybe they work for a crypto firm. They're somewhat involved in the industry. So CRA version number 3 is the charging pit bull. You've gone from the upset Labrador Retriever to the barking German Shepherd, and now the pit bull. Now, what is the charging angry pit bull? And what is the concern? The concern there is that CRA looks at your scenario and says, hey, you've got a lot of money that you didn't remit in taxes. You've got several years or maybe many years. But the big issue is that they feel that they know you intentionally avoided paying your taxes. And they feel they can prove that. So the problem with that scenario, if they feel that they can prove you intentionally avoided paying your taxes, now you've got not just a tax bill, but a legal problem, because that's tax evasion. So now you're thinking, oh, I got to go to court with tax evasion charges against me. And how does it escalate to that? Well, it escalates. One of the ways that can escalate to that level is CRA can prove that you have knowledge about crypto and taxes, or you've got experience in accounting, you've got experience in business. Let's say you've owned a business and you've remitted GST. You've owned a business and you've done payroll tax for your employees, or you work in crypto, or you've been trading crypto for 5 years. You're involved with crypto somehow. You're associated with a crypto platform. You're part of a crypto platform. If you stand in front of a judge and say, no, I had to pay my taxes, and the judge is going to look at you and say, you're telling me that you're experienced in crypto and you're part of a crypto platform, and you're trying to tell me you didn't realize you had to pay taxes on this. It's going to be a hard sell. So for me, one of my biggest concerns is when somebody comes to us, they don't have taxes they filed in context of crypto, and they work in crypto. That's a scary scenario. You don't want to be in that boat. And I would say that's red alert, emergency. Get your crypto taxes filed right away. Otherwise, that could really escalate into a big problem. So there's my main point. Number 1 is get the taxes filed. Otherwise, it escalates into fees, penalties, possibly audits, and possibly worse. And you don't want any of that. That's because that's not fun, and it can cost a lot of money. So I'll pass it back to you, Matthew, if you wanted to expand on that a bit more, if you wanted to kind of get some clarity. Otherwise, we can switch over to my second point.
No, I think that's pretty clear. I think that put the fear of God into many people, especially like the quote unquote day traders. Um, I imagine they do a bajillion transactions a day, and so you bring up the part about the journal log. Um, that would probably be a good idea. If you did not, I imagine at least these like the platforms you trade on probably have some sort of transaction history, so you might want to download that if that's the case. But from the
Yeah,
mean on, you should probably take care of that yourself going forward.
Yeah, and for sure. And when I say a transaction journal, I definitely don't mean to be recording all your transactions because that's a lot of work. And there, you can export the data, you can use an API, there's crypto tax software. The transaction journal, and this is something that if anybody on the call wants to talk to me about it independently afterwards, you can just go to our website and send me a message and we can do a quick chat, but I can explain how it works. But for just to keep it brief on this call, in summary, I would use a transaction journal anytime you do something that's unique. So for example, let's say you're going to do a cross-chain bridge. You're going to do that, or you transfer money from your bank into the crypto sphere, or the other way around. Anything where it's beyond the typical buying and selling and the standard monthly things that happen when you're doing transactions. Um, but the reason you want to record some of those unique things is that sometimes the crypto software and your crypto bookkeeper, your crypto accountant, they kind of will not know how to interpret that, or they may not even see it. It may not show up in the data. So that's why you want to keep like a date, like day, month, year. A lot of people ironically put the month and day and forget the year. And then 3 years later, they're wondering what the heck is going on. So put the year and record the oddball transactions, which are those strange ones that aren't automatically captured by software sometimes, and ones you may need to explain to your accountant.
What
And that will save you a lot.
what would you classify as an oddball one? Because to be honest, I can't think of one myself.
Okay, it's setting up an LP. So let's say you're going to yield farm and you set up an LP on Solana and you're farming the SOL token. So when you set it up and then when you close it, I would put the date of when you started and when you ended. And that can help your accountant figure out what the nature of that transaction is, and also to realize that there was income produced from the start to the finish, the rewards you collected, and your accountant then knows for sure that they've captured the start and the end, because there may be a capital gain or loss on the asset value, and there's the income from the rewards. It'll make sure they don't miss that. The cross-chain bridge is huge. One thing about the cross-chain bridge is oftentimes the software does not capture the cross-chain bridge fee. Some do, some don't. So if, for example, you come to us and we do your crypto report and we see that 3 times you used a bridge, we can go in and make sure that the bridge fee is included. And same thing with putting money in or out of your bank account, whether or not that's a part of your ACB or not. All those things are important.
Okay, so, sorry about that. But that's a good point. I didn't think as this LP. But I guess farming that was it's been a while since like I remember the DeFi summer and farming was everything. Um, I guess a very specific question with respect to farming. Uh, Most of the tokens end up being worthless. So do you calculate it when you get the token, or like how would you calculate that gain?
Okay, so the gains are calculated if there's income received from rewards. So though that income is captured whenever the rewards are paid out. And the same thing with closing the LP. If you close the LP, that's the date and moment when it's taxable. And even if the transaction is worthless, that's from a tax point of view, that's good, because that may give you a loss that you can write off, which is yet again another reason why you want a transaction journal. If you put $5,000 into an LP and there's huge divergence loss, also known as impermanent loss, let's say it goes to $50 and the thing is pretty much wiped out, then that's a tax deductible loss for you that you can use to offset against your gains. So you want to capture that.
And one more thing with respect to just to go back to airdrops, some of them aren't really worth anything, but every once in a while there's something that at least starts out being worth quite a bit of money. How would like do you have to sell it to get the profit, or is it the moment you get it, whatever it's worth at that date, that's the taxable? Because like, what if it you get 100 tokens at $10, $1,000, and then 6 months. Sorry, my Alexa did a thing. And 6 months later, it becomes worthless. It's 50 cents. Do you still have to pay the $1,000 on that, or is it?
No, definitely not. You capture the tax when the asset is sold. So if you sell any crypto from whatever it is into USDC or Canadian dollars, or if you switch from one crypto to another, it's at the point of the transaction when you when you eliminate that coin in your holdings, that's when the tax is captured. So if you get an airdrop and you hold on to it for 5 years and it ends up being worth $100,000, you still don't have to pay the tax on that because you haven't yet sold. So you
Okay.
have an accrued capital gain, but not a taxable capital gain.
Okay, that's good to know because I think like a lot of airdrops and a lot of farm tokens, sometimes they're worth quite a bit like at the time, and then they kind of just become worthless over time. And so uh, I think that's good to keep in mind. I see Kaz has this questions. Do you mind if we take a question
Oh
from
yeah,
Kaz before we
yeah,
go to
for
the next
sure. Go
one?
ahead. No, go right ahead.
Yeah, right. Thanks. So great content so far. What about if someone hypothetically reports big, big type of gains, but doesn't report the 15-cent kind of gains, nor the losses? How would which version of the dog do you get from CRA in that case?
Gotcha. Okay. Well, okay. So let's talk about the technical laws and rules, and then reality. So technically, you have to report everything. However, there are such small dollar amounts that they're what a lot of accountants would say are inconsequential. So, for example, you got $1,000 transaction, and somehow or another, there's a reason why it's off by 75 cents. It's not worth your accountant's time, your time, or CRA's time to investigate the 75 cents. And I've never heard of CRA nitpicking anybody looking at tiny, inconsequential amounts. They're not there for that reason. But if there's revenue, like tax revenue that they can collect that makes it worth their time, then that's what they're looking for, really, right? So if you've got $1,000 transaction and it's out by $300, $400, a fairly large percentage, they might look at that. But if you've got $2 that's missing somewhere, I don't think your accountant is going to have you looking for that, right? So there are inconsequential amounts, and I've seen that just overlooked and bypassed, not worth anybody's time, that kind of thing.
Is there a general dollar value, like $10, $100? Like where do they raise an eyebrow?
No, they don't have any dollar amount, not that I'm personally aware of. Now, whether there's something in an interpretation bulletin somewhere, if there is, that's possible. If there is, I'm not aware of that. In my personal experience with my accountants and the audits I've been through, if you're looking at like a coffee money, so to speak, I've never had any questions or any issues with coffee money. If you start looking at, I would say, let's say you've got a multi-million-dollar issue and you're being audited and there's $100 missing, I don't think your auditor is going to hunt down that $100 if there's $1 million on the table. However, let's just say there's only one transaction and it's $1,000. It's off by 100. The auditor might look at that because even though it's only $100, proportionately to the total gain, they'll say, well, that's 10% of the gain. So they might come back to you and say, yeah, it's only $100, but it's 10% of your entire gain. Your numbers are out by quite a bit because you shouldn't be off by that much. So if they're looking at a relatively small transaction and it's out by 10%, they might ask you. But then again, you look at, yeah, go ahead.
That's good that you brought that up. I was literally about to ask, is it relative? Like if you're talking about millions of dollars, $1,000 isn't a lot of money. But if you're looking at $1,000, $100 is a lot of money, right?
Well, exactly, and one of the reasons why the relative amount is important is, for example, with currency rates, CRA typically wants you to use the Bank of Canada rate on the day of the transaction. However, they have stated quite clearly that they will accept rates from other sources besides the Bank of Canada on certain conditions. For example, it has to be publicly available, it has to be independent, it has to be routinely published. So, for example, if you look at for a currency service that provides currency trading and they've got their rates published continuously, CRA would likely accept that. So what if the Bank of Canada rate and the currency service rate are out by 0.0001? Well, on a large transaction, that could turn out to be $1,500. But CRA has said that they would accept both rate sources. So they're not going to get into haggling about fractions of a percent and small amounts, especially if you've got a technicality like what rate service are you using.
All right, that's good to go. I see JTP had your hand up, but it's now down. Did you want to ask a question?
Yeah, hi there. I have a, can you guys hear me?
Yeah, perfectly.
Yeah, for sure.
Great, great. I appreciate the space. It's really good, very informative. I'm an accountant, so I totally understand the pain points of going through audits and things like that. My question, you kind of touched upon it, but my question is more so if you're a medium-sized, let's say, trader, and you have a lot of small transactions, for example, token to token, but it's like a dollar here, dollar there difference, would you consider that as immaterial, or would you calculate that as a loss or a gain, or would you sum it up to a total number of transactions and average that out?
I would do the latter, what you said there. I would sum them up and average them out, and I wouldn't consider it immaterial if it is a lot. Like if you said it's a lot. Like for example, if you've got 1,000 transactions and you've only got 4 of them that are a dollar, then I think that might fly under the radar screen, either not noticed or maybe not cared about even. But if you're a day trader or someone who maybe your trading activity shows you've got a large quantity of $2 or $3 transactions that could add up to a measurable amount of money, um, then it would make sense to use software or a spreadsheet to consolidate those. And of course, it's easy enough to use software to get an average throughout the calendar year of those small ones and include them. But I think if CRA were to look at that and say, hey, it's only $3, but you did 1,000 of them and that adds up, then I wouldn't bypass them. I wouldn't try to slip that through, right?
Right, makes sense. Got it. Thank you very much.
Yeah, no problem. One other topic I should bring up that kind of relates to all this, and this is worth bringing up for everybody's attention, is CARF, CARF, which is the Crypto Asset Reporting Framework. And this will affect everybody in Canada and everybody who trades. And the point of me bringing this up is to highlight how important it is for you to get ahead of this. If you haven't filed crypto taxes, or if you know people who haven't filed, a lot of them have kind of a nonchalant attitude about it, but that could end up biting them in the rear end if CRA kind of discovers that they haven't filed. And CARF connects to that. So CARF is an organization that has been joined by Canada and 47 other countries, and it's called the Crypto Asset Reporting Framework. And what it's going to do is supply each country with uniform reporting standards for crypto transactions. So all countries will have the same standards on how crypto platforms, whether it's DeFi, centralized, whatever, wallets, the whole 9 yards, it'll give them universal standards on how crypto transactions should be reported. And of course, this came about because you got somebody in Canada saying, oh, I got data from Australia. It's different. Somebody in France has data from Brazil. So the regulators and the tax authorities said, we need to make this uniform because traders around the world are trading around the world. And otherwise, it's going to be a mess. So that part is smart, really, to have uniform standards. But the scary part for somebody who is a crypto trader and especially hasn't filed taxes is data sharing. There will be data sharing amongst all the member countries. And part of the rules will be things like exchanges will need to report name, address, and if you're Canada, social insurance number, whatever the tax number is in your country, the transactions you did. If you did transactions above $10,000, $15,000 total, that'll get reported. So essentially what's happening, all this data is going up to the tax authority, which then shares it with other countries. So if you have done transactions on an Australian exchange 2 years ago, don't be surprised if you get a letter from Canada Revenue Agency saying, hey, in 2021, you traded crypto on a platform in Australia and you didn't report it. And that will come through because of CARF. And the CARF rules will be implemented in Canada in 2 phases, 2026 and 2027. And we're pretty much in 2025 right now, which is why I'm so strongly emphasizing that if you have not filed your past crypto trading, you should, because you might get an audit letter down the road if you don't. And it will be much cheaper, much less pain, much less hassle if you get them filed before CARF ends up rolling out and people get audit letters, because that's what's going to happen. Nobody knows the scale, nobody knows the speed, but it will happen because it's already happening now. And it'll be just even that much more impactful once CARF is officially launched.
Wow, that's interesting stuff. And especially like with the reporting and stuff, like you said, there are exchanges all over the world. Um, we probably don't even know where half of these are based.
Yep.
Some of them. So a lot of you are probably thinking, "Oh, it's country XYZ. They're not going to do anything if I liquidate there or make a transaction there." But they with that, what is curve you said?
CARF, CARF.
With that, that kind of should dispel that rumor. It sounds like they're trying to take care of that. So definitely get those filing. You said there was something else you wanted to talk about. Um, sorry, I had it right in front of me, and then it disappeared. Um,
Well, one thing I think you had mentioned to me is commonly overlooked tax deductions and also the new capital gains inclusion rate. If you want, we can take a couple minutes and quickly run through those.
yes, yes. So yeah,
And then
as everyone knows.
and sorry, then there's also one last thing is also the actual creating of the crypto tax report. That's actually the heart and soul of why our company exists. And that's the issue that most people are going to come into, because you may know all the rules, you may know all the taxes, but if the crypto tax report is wrong, then your reporting is not going to be correct anyway.
So let's go through that. That's probably the most important issue, because, like you said, if it's all wrong, I mean, I've actually attempted to do my taxes on my own before I got into crypto, and I was just like halfway through before I said forget it, and I hired an accountant.
Mhm.
Um, it's complicated, so I imagine, and that's without crypto. So I can't imagine what it would be like for us to do our crypto stuff on our own when we don't have the appropriate help.
Yeah, and it is incredibly complicated. Like I can do my own, but I had Andrew, who's a part of our company. He's actually the guy that started this company with, do my taxes, and I think I would have had a stroke if I had to do it myself. It's extremely technical. There are so many data points of errors, and here's the problem. If I were to compare it to traditional investments are quite simple. You got a dividend, you got interest, you got capital gains, and you don't have any weird things like yield farming and all the complicated currency things that happen in the world of crypto. And you also have like standards in Canada and standards in America. So the tax reporting on all that stuff was worked out 50 years ago. You just get a T3 slip with a number at the bottom and you just put it on your return. It's easy as pie. Now with crypto, we've identified about 40 different areas where the crypto tax reports are actually wrong. Even though you put in all the numbers, it comes up with all the green check boxes, it looks right, it's actually wrong. Now, most of these things we don't really go through publicly. It's a lot of our internal training or whatever, but I'll let out a few here just just to show you how weird and complex it can be. One is time zones, and this is one of the biggest, weirdest, most damaging things we've seen. So you're in Toronto and you've got 2 or 3 different exchanges, plus you got DeFi, and maybe sometimes you're trading on a VPN. So you file your taxes, you got all the green check marks, you and your accountant are committed, everything's perfect, you got the ACB right, all the realized gains are right, and let's say you owe $5,000 in taxes.
Sorry about that. I have no idea what happened, but thank you all for coming back.
No problem. So should we just carry on where we left off there?
Yeah, you were talking about time zones.
Yeah. So okay. Yes. So you're going into your second year now. Your accountant contacts you and says, your reports are off by $10,000. We can't figure out why. And so now the problem is you've got all the correct data and all of the reports look correct. You got all the green check marks. Last year was perfect. This year is perfect. So why is it that there's $10,000 that somehow or another is missing, or it's out of line? And it could be any one of 10 or 20 or 30 issues, and you could spend hundreds of hours trying to figure out what went wrong. And it could simply be the time zone. Let's say, for example, you had one platform you're trading on set to Eastern Standard Time, and another one was maybe set to some time zone overseas. So the problem is when your crypto data comes in at December 31st at the cutoff for that tax year, one of your platform's gains are all included and the other one isn't. So you end up with a scenario where you have 7 hours worth of data, which has a lot of the year-end distributions and payouts and transactions. They all roll into the next year, but then the next year the time zones don't match. Maybe you got them right, or maybe they're different. So there's this mysterious money, and there's no way to figure it out unless somebody thinks and says, "Oh, let's check the time zones that you had last year, and what were they?" You probably have no way to know. So it ends up being a bit of a bookkeeping nightmare. I had a scenario once in my own business 10 years ago where there was $5,000 that somehow or another was mysteriously missing. Nobody could figure out what happened to it. And I spent nearly $5,000 in bookkeeping and accounting fees to figure it out because I had to, because CRA demanded that we balance the books, right? And it was a really bizarre technicality that caused it. But my bookkeeper was almost in tears. She was 2 weeks trying to figure this out, and she went through an entire bottle of Tylenol to find out this bizarre technicality. In crypto, there's 20, 30, 40 issues where you can have bizarre technicalities that can throw off your tax reports. Time zones being one of the biggest ones. I am sure the Tylenol will sell many bottles of Tylenol in the next few years in Canada, people trying to figure out the errors in their tax reports that've got to do with time zones, and they probably don't even know the source of the error. And then you've got bots, bridging, you've got month and days mixed up in the columns in the CSV exports. It goes on and on. So creating a tax report it's really complex, and there's no fix to it at this point. You can use the software, but then you still need human intervention to go in and make sure that the software output is accurate.
Yes, that's I didn't even think of that. The dates being mixed up, the time zones, that's just incredible. It's very informative. But at the same time, uh, I'm one of those people that just buys and waiting for my exit strategy. And it's just sort of just like, man, like, is it going to be, it sounds like a double-edged sword.
Well, in some ways, and you mentioned like buying and waiting for your exit strategy. There's another issue that's important as well, and this is one of the things that we often deal with the accountants, because our role is not to do the taxes, but our role is to produce the report and give to the accountants, right? Well, one of the things that comes up with, I would say, almost all, perhaps even all of our clients, is somebody is expecting to pay capital gains, and CRA says, nope, it's going to be income. And you say, why? You're like, I held this coin for 2 years. I didn't even trade it actively. Why are you saying it's income? Well, there's a thing that's called tainting your account. Let's say you've got $100,000. You put $95,000 into one coin and you hold it for years. So you've got the other 5,000 where a couple opportunities come up. You say, okay, I'm going to buy Solana, and then 3 months later it's up a lot. You sell it, then you move to TON, and then that goes up a lot. Or maybe you do a bit of yield farming. So you're moving around that other 5,000 a bit more frequently. And if you do frequent trading instead of buy and hold, CRA is going to say that's not buy and hold, that's not capital gains. You're generating income. That's 100% taxable. So you've got this $5,000 piece in your wallet or your centralized exchange, and you're trading it and you're generating income. So a couple of years later, you sell your Bitcoin, expecting it's going to be capital gains. And CRA says, nope, the whole thing is all income. And you say, why? Well, they say that we have evidence that Bitcoin was in the same account as the one where you're actively trading. So we are deeming that account is an income generating account. They can apply their tax rules at the account level instead of at the coin level. So ultimately, how do you fix that problem? Well, you set up separate accounts. If you've got something that you want to buy and hold and you're hoping on getting that favorable tax treatment of capital gains, you put that in a certain wallet and you name it. Like for me, I actually put names on my wallets like LTH, long-term hold. And I don't do yield farming. I don't do staking. I don't do active trading, because that's all income generating stuff. And then I will have different wallets that I label AT, active trading. And so you don't want to mix active trading and buy and hold in the same wallet, because you can ruin your capital gains, your ability to declare capital gains in that wallet otherwise.
Oh, good to know. And Kaz brought up he has his hands. But before I get to Kaz, Karan, who's listening in but can't have his mic on because he's working, had a question. Uh,
Yeah,
it's
go ahead.
it's NFT related. How are profits earned by selling art NFTs taxed in Canada?
Oh, Karan, oh my goodness. We just had a massive issue with NFTs and with one of our clients. And first of all, we may need to talk. NFTs, first of all, in Canada, it's very possible they're subject to GST. Our client almost had to pay the GST on all of the NFTs sold, even though they hadn't collected the GST. But luckily, we determined that he didn't have to collect GST because the master sales were actually based in America. And so, but if you're in Canada selling to Canadians, you definitely have to collect the GST and you have to remit it. So selling NFTs, that would be considered income. I can't see how that would be capital gains, because unless if you bought one NFT and then you just held it, that would be different. But if you're in the business of creating NFTs and selling them, that's clearly going to be business income. And the proceeds from that would be 100% taxable. So Karan, I know you can't use your mic right now, but I just let you know, feel free to reach out to us on our site, CryptoRecords.ca. If you've got a question, for us, we can talk about it a bit more independently there. And also, I should mention that to everybody too. On our website, if you want to get more free education throughout all of next year, we're going to do AMAs, webinars, mini courses. You can register on our website, and we do not spam you. We don't send out marketing stuff. We'll just send you out the announcement of when the webinar is happening, and it's free to join. So feel free to hop on those if you want. So Karan, if your question has not been answered now, we can do it. We can cover that more, or you can reach out to us directly. It's fine.
Yes, keep an eye out for those webinars. Like it'll be very helpful, especially to get from step 0 to step 1, I imagine. Kaz, like we'll have one more time for one last question, and I'll give it to you.
Thanks. So this might be a little esoteric. We're trying to build Astronodao, a elastic token, which is also called a rebasing token, where the price is relatively predictable, but the quantity in your wallet may change over time.
Yeah.
Which means that, to me, like all the regular accounting rules go out the window because we can't balance your books anymore. What's the thinking on taxation for those?
Okay, that's a really good question, and I have a very strong opinion on it. But I must say that at this point, Canada Revenue Agency has not released an interpretation bulletin on it, and we've been through the rebase issue with clients. So far, there's the general accounting community. First of all, most of them don't know what rebasing is, but those who have gotten into it are very confused about it. However,
of course.
However, rebasing, in my opinion, and I would stand on this, I would arm wrestle CRA on this to make my point. Rebasing, I do not believe, is a taxable transaction. Here's why. Rebasing at its heart and soul would be this. Imagine you've got a $1 million building that you use as a conference center, and you rent it out to one client who takes the whole thing. So you got your building with one room. They're using the whole center.
I don't know if you guys lost, but I lost the speaker.
Yeah,
we can hear him.
You can hear me. Okay, good. So can you hear me now, Kaz? I think Kaz might have lost his sound. I'll continue on my explanation, and then Kaz can join back later if needed. So if you've got your building with one conference room in it, and then the following week you split that building into 3 different rooms, you still have one building, but you've divided your conference hall into 3 rooms. So you can, if you have a building that's worth $1 million, it's still worth $1 million, whether you split it into 1 room or 3. If you put up your moving room dividers, you're simply adjusting the space in the room. Rebasing is very similar to that. And we actually have a rebasing bulletin. Not bulletin is not the right word, but explainer that I can send out. It's a one-page PDF. If anybody's interested in getting that, I can just connect with us on the website, and I will send you an email directly with the PDF that explains rebasing and the logic behind it. So I see JT's giving me a thumbs up. So yeah, we'll connect, JT, and I'll send over that rebasing for you. I don't think rebasing would be, I think you'd have a very strong case to CRA to say that rebasing activity is not a taxable event. It would be a taxable event if you disposed of your rebasing coins and you sold them like anything else. But the rebasing mechanism, I don't see any logic in saying that that's a taxable event. It's just it's a measurement mechanism, really. It's not actually, it's not trading. There's no gains, there's no losses, and so on. There you go. That's my thoughts on that.
That's that's
Thank you.
interesting. I also thought the NFT thing. I've stayed away from them, but yeah, I don't see why they wouldn't be charged GST if you were to like make a piece of art and then put it on the blockchain and then sell it. It would be no different than doing that in an traditional art with an art gallery. I don't know why the thought never
Yeah.
occurred to me.
Yeah, absolutely. And unfortunately, that could cost a lot of people a lot of money, because if you sell your NFTs, don't collect the GST, you're legally responsible to collect this. You would have to pay it, even if you're people, and you have no way to collect that from people who just bought it over the through like an NFT platform. So I think that could cause people some big headaches.
Does that apply to fungible tokens as well? Like if I sell a fungible token, do I have to collect GST?
Now, do you mean like you're creating one token and selling?
Creating it and selling it. And there are two different cases. One is where it's I'm selling it for my own profit, but in my case, I'm interested in I'm selling it with and the money is being put into treasury, and then they can exchange it back to and from the treasury.
Right. Okay, so obviously I would like to explore it a bit more, but in general, like without going into the details and having the full talk about it, I'm going to say if you think about GST as goods and services, if you're creating a fungible token and it's being sold as some form of product, some type of service, then yeah, that would definitely be no different than selling like a tangible, physically made product. It's electronic, but you're still selling a good. It's goods and services tax, right? So again, if you wanted to reach out to us separately and just kind of have a full conversation about it, that's fine. But if you're selling goods and services, then that's GST for sure.
No, this is where I see it as money. Like we're selling money, right? And it's to be used in exchange for other goods and services, but the money in itself isn't a good or a service, right? It's just money.
No, the money would not be. So maybe I don't misunderstand your question a bit. So explain to me then the nature of this. Are you kind of like creating one asset and then selling it in exchange for another?
It's like a tether, but it's rebasing. So tether, you can sell it for US dollars. You buy it for US dollars, and then you can sell it back for US dollars, right? And sometimes you as a consumer, you're probably buying it off an exchange. But if you're a market maker, you're buying it off of Tether Foundation.
Okay, I see what you're saying. Okay, I follow your question better now. Okay, so I can explain. So with CRA, they have rules that govern if something is taxable or not based on the nature of the asset. So for example, let me explain. Let's say you're selling stocks. You're selling Ford stock, you're buying GM. You're going to say, okay, you got rid of one type of asset and you clearly have a different one now. You had your Ford, now you got GM. That's a different asset. They're going to say that's a taxable gain. But what if you sell US dollars for US dollars? So if assets have a very similar nature, you can make the case you don't have a taxable transaction because you went from US dollars to US dollars. There's no real taxable event there. Now, there is a bit of a gray zone with so many of these rules. Like, for example, there's actual US dollars like USD, and then there's USDC. which can have a slightly different value because it's not perfectly pegged. So some people who are trading extremely high values in USDC and maybe USDT and other stable coins, they're actually in the business of arbitrage, where they're making money on the slight percentage difference from different US assets, and they're actually generating income. That's taxable. That would be taxable. But let's just say you've got $100,000 in one asset and you're not trying to generate income. You're not churning this over 5 times a day. You just do like a one-time trade where you're moving from one asset to another. And the reason you're doing that is maybe the second party down the line doesn't accept the first one. So you're just changing it as a matter of convenience. You can make the case to CRA, hey, I went from US dollars to US dollars because this other guy couldn't accept the first blockchain, so I put it on the second one, that type of thing, right? Similarly, if you companies can often issue different types of stock. So Ford, for example, I'll use them as my ongoing example. You could have Ford Series A shares or Series B or Series C. You can trade between these different series of Ford shares, and it's not a taxable transaction. You have different shares, but you haven't changed the nature of your investment. You haven't gone from Ford to GM. You're just going from Ford to Ford. So in that case, you can actually carry over your ACB, and it's not considered to be a realized capital gain for tax reasons. So what you're bringing up, quite likely, there's a possibility it might slip into that gray zone. But if you're simply going from money to money and the nature of the asset is similar, it may not be taxable.
Okay. Yeah, that helps. I mean, it is from money to money, but it's not like Canadian dollar to Canadian. It's not like US to USDC. It's more like Canadian dollars to US dollars. It's a different exchange rate, but it's still money.
Right. If there is a different exchange rate, then I think CRA is going to say that's taxable. Because, for example, if I make or lose money trading Canadian dollars for British pounds, that's going to be taxable because there's a differential rate and it's a different asset. If you wanted to kind of get into a big conversation with us about that, just reach out to us afterwards.
Yeah, we'll do.
We can chat.
We'll do.
Yeah, for sure. If anybody else has questions that are unanswered, if you think of something afterwards, you can message us through the website, and I can hop on a video call with you, and we'll talk through it. That's no problem.
Yes, definitely check this out. This has been very informative. CryptoRecords.ca is the website, correct?
Yeah, that's right. Yeah.
Yeah, so definitely go out and check out his website. You might have a few people getting in touch with you in the next few hours.
Yeah,
Th-
that's fine. Yeah.
this has been very informative. I think you brought up a lot of things that I think a lot of people didn't think of, and it's something that they need to prepare for themselves. And I think they're going to be more prepared going forward because of this. So, like the information you've provided has a huge financial number attached to it in value, in my opinion. Um,
Well, that's
but
great.
just as I reiterated at the beginning of the space, keep in mind he provided very general advice. So there might be a slight tick in your situation that makes your situation completely different. So it is always best to confer with someone like Rod, someone at Crypto Records, to give them your very specific situation so that they can provide the best advice for you when you file your taxes. Is that like a good disclaimer from how to
Yeah, it
do
is
that?
a very good disclaimer, and it is true that everybody's scenario is different. There's a lot of interpretation that happens in somebody's crypto activity where you can slide from one end of the gray zone to the other pretty quickly based on the nature of the transactions done and the intent behind them. So absolutely, the rules need to be applied to each individual's transactions done, literally on an individual basis. Absolutely.
Yeah, so definitely come tax time, you know, don't be like the irresponsibles and April 25th go reaching out to Rod. Reach out to him in January. uh,
Yeah, actually, that is a good point. Last year, Andrew was absolutely overloaded during March and April, and he actually said to me, "I don't know if we want any more clients." It was actually getting stressful for him. So if you do want us to have a look at your stuff, Andrew will be in a much better state of mind in January and February, and the bookkeepers that he works with, they'll have a lot more time as well. So yeah, we're not under as much pressure in January, so definitely better to get us working for you at that time.
Yeah, this has been very great. Just thank you for joining us. For those who are listening, and if you think you can be a good speaker, we're always looking for more speakers. We'd love to have you on board. Yeah, we'll see you next time, and I hope everyone has a great weekend.
Yeah, and thanks for having me, guys.
Thank you. Thank
See
you.
you.
Take care,
Thank
guys.
you.
Thank you very much, Rod.
Okay, you're welcome. See you later.